Nvidia's strong results not strong enough for investors. Here to tell us why is Ben McMillan of IDX Advisors, and I'm Lisa Bernhard with Reuters. All right, Ben, we had Nvidia report this week, and on the surface, the earnings look strong, but the stock has been selling off since. Take us under the surface and tell us why investors are saying, not quite good enough after so many blockbuster quarters.
Well, I think that's just it, is the market has become accustomed to Nvidia just frankly knocking the lights out quarter after quarter. And this one came in, as you said, good, but not great. And in particular, when you're, kind of looking at the sales pipeline, they issued some downward guidance as it relates to their new Blackwell processor lineup, which everybody's excited about. That's proving to be a little bit more challenging to manufacture than anticipated. They did and also announced a $50 billion stock buyback, which is positive, very positive, reflects continued confidence in their cash flow. But I think investors are starting to question, the growth rate going forward. And with these high flying tech stocks, particularly, AI related this year, it's all about discounting, forward growth. And so I do think this is emblematic of kind of the broader AI trade in which investors are, remain optimistic on the sector, but they're starting to be a little bit more discerning about the premium and the multiple that they're paying for this growth.
Okay, so investors have driven Nvidia shares up, some 150% so far just this year alone. When you look to future earnings, and where do you see sort of the stock going from here?
Yeah, I mean, that's the million-dollar question. I do think at these levels, given that it's had such a run up and given that we are kind of starting to be in the later cycles of the AI trade, like I said, I think the market is going to be more discriminating. It's also impossible to ignore the macro backdrop. So, when you look at the macro economy, things look strong. We got some good data today. But, we are starting to get into territory where we're seeing a rotation out of the Mag 7 into more defensive sectors. If you just look at over the last 30 days, it's the defensive sectors of the S&P that have been winning over, technology, for example, or the NASDAQ. And so I think that, again, is reflecting kind of a broader shift of investors that are maybe taking some money off the table from stocks like Nvidia and redeploying it into safer sectors. So that's not to say that it's not a buy here. It depends on your risk tolerance. But I do think you're going to see, in general, more of investors starting to take profits from Nvidia and redeploy it elsewhere.
Circling back to the tech theme, we also had earnings this week from Salesforce, and that stock is up today. There have been some concerns from investors that maybe the software companies are not really the place that's going to show profits first when it comes to AI. But that doesn't necessarily seem to be the case with Salesforce. Is that correct? And can you explain why?
Yeah, Salesforce is interesting because I actually think it's one of the companies that's very well poised to potentially immediately benefit from generative AI. And when you look at they do as offering a very highly integrated CRM, that is a perfect use case for AI. And in fact, they're deploying it. Their Einstein SDRs, I think they call it, allows to go in and immediately start interfacing with prospects and things like that in a fully integrated fashion. So, contrasting with a lot of the hype around AI and the potential disruption of AI, this actually, I think Salesforce is well poised, given their footprint, given their kind of incumbency dominance, to immediately start deploying generative AI agents, as they're called, to start, interacting with customers and start, driving real-time immediate productivity gains. So I think, actually as it relates to AI embedded in Salesforce, I think that's, very strong growth potential going forward. And I think the market's responding to that.
You mentioned CRM, and just for the layperson out there, that's customer relationship management is their platform. All right, let's move on to Crowdstrike. There was that huge disruption mid-July, which knocked out the Windows platforms due to that faulty update. Crowdstrike had earnings this week also. That stock is being rewarded. Perhaps that would surprise some investors given what they went through. What did we see there in their report?
Yeah, I mean, their Q2 results were quite strong, I think, despite that July 19th outage. It's important to remember that they lost 40% of their value within 2.5 weeks after that. So they got hammered pretty hard by the market. But I think what their Q2 results showed is that they actually did a good job at responding to the incident, keeping customers, embedded. It did revise full year guidance down slightly from 31% to 28% year over year, which doesn't seem like a lot. So I think also the market's looking at that and saying that's pretty durable, all things considered. Now, the caveat of that is that, CrowdStrike is still kind of the dominant play in this space, and they're trading at a very lofty price earnings multiple. And the competition in this space is extremely fierce. So it's one where, again, this was a good report, but I think going forward for, investors are going to start to be, not unlike Nvidia, more discerning about the premium that they're paying for, companies at these lofty valuations.